Hello traders, welcome to the Tradify, where we simplify the complexities of the financial markets. In today's video, we will understand the psychology of candlesticks, how we can identify which type of candles have active buyers, which have active sellers, and which candles show neither buyers nor sellers are in control. Just like we analyze a person's behavior, habits, and routine to understand their psychology and predict their future, similarly, in the market, we can study a candle's body, wick, and structure to know who is controlling the price, buyers or sellers. And this helps us predict what might happen next in the market. There are many retail traders who do not understand candle psychology, and because of that, they take wrong trades and end up facing losses. If you also believe that a green candle means buyers are in control, or a red candle means sellers are in control, then you are absolutely mistaken. We cannot decide candle dominance just by its color. In today's video, we will clearly understand which candles are controlled by buyers and which are controlled by sellers. As always, the video is going to be very interesting and full of knowledge. If you watch the video carefully till the end, you will definitely learn something advanced. So let's begin the video. Make sure to give this video a like, and if you're new to the channel, don't forget to subscribe. First of all, I want to clear a basic doubt for all of you, that whenever a candle is formed, whether it's red or green, both buying and selling take place during its formation. For example, let's say a green candle is forming here. During the formation of this candle, many sellers might be selling based on their analysis, and at the same time, many buyers are also buying based on their analysis. So, during the formation of this candle, both buying and selling are happening. Now look, the candle is completely formed, and it turned out to be a green candle. Many people who don't have enough knowledge about candle psychology may think that just because it's green, it means buyers are in full control. But you should not decide the control just based on the candle's color. To know whether buyers or sellers are in control, we need to read the psychology behind the candle. So now, let's look at different types of candles and understand their psychology. You need to watch the video very carefully and make sure not to skip any part. After watching this video till the end, you'll be able to easily read the psychology of any type of candle. And at the end of the video, I'll show you a candle, and you'll have to tell me whether that candle is controlled by buyers or sellers. You'll only be able to answer that question correctly if you watch and understand this video carefully. So, let's get started now. As you can see here, we have two candles. One is red and the other is green. Many people refer to the green candle as a buyer's controlled candle and the red one as a seller's controlled candle. But I would consider both of these as bearish candles, meaning that sellers are in control in both. Let's understand how. When the green candle starts forming on the chart, the price opens from a certain point, which becomes our opening point. As the candle starts forming, buyers begin to buy in large numbers, pushing the price upward. But when the price reaches a certain high point, buyers lose interest in buying at higher prices and begin to weaken. This gives sellers an opportunity to sell at higher prices. A large number of sellers become active and start selling, which causes the price to fall back down. When the price returns close to the opening point, it closes there, forming a green candle. When such a candle forms, we don't call it a bullish candle. Instead, we call it bearish, because although buyers pushed the price up, they couldn't maintain control, and sellers pushed the price back down. This candle forms a long upper wick, indicating strong selling pressure and that sellers are in control. In this condition, if you see extra confirmation, you can plan for a sell-side trade. Similarly, when the red candle starts forming, the price opens from a point and sellers start selling, causing the price to drop slightly. At this point, buyers become active and start buying, leading to upward price movement. Once the price rises to a certain level, sellers again become active and begin selling. This brings selling pressure, and the price begins to fall again. This time, the price breaks below the opening point and closes lower, forming a red candle with a long upper wick. This tells us that even though the price went up, it faced strong selling rejection from higher levels, causing it to fall back. So we will also consider this candle as bearish because of the strong upper wick indicating sellers' control. Therefore, whenever you see red or green candles with long upper wicks compared to their body, you should understand that sellers are in control at that zone. Now, let's move on to understand the second type of candle. Our second type of candle looks something like this. We also call these candles hammer or pin bar candles. These candles are called hammer or pin bar because they look exactly like a hammer. In these candles, the lower wick is quite long. Such candles are called bullish candles because when they form on the chart, it tells us that the price is under the control of buyers. Let's understand how these two candles form on the chart and what their psychology is. When this green candle starts forming on the chart, the price opens from a certain point. As soon as the price opens, many sellers start selling. When a lot of sellers begin to sell, the supply in the market increases, due to which the price starts moving to the downside. As the price moves down and reaches a certain point, the sellers lose interest in selling at lower prices, and the buyers start showing strong interest in buying at those lower prices. Many buyers begin buying there, which increases the demand in the market, and the price starts moving upward. As the price goes up, it breaks its opening point and closes above it. This forms our green pin bar candle. Its lower wick is much longer compared to its body, which tells us that there is strong buying pressure in the price, meaning the price is currently under the control of buyers. So whenever you see such a candle forming on the chart, you can plan a trade on the buying side by looking at extra confluence. Similarly, when a red pin bar candle starts forming on the chart, the price opens from a certain point. After the price opens, many sellers begin to sell, and the supply increases, causing the price to move to the downside. As the price moves downward and reaches a point, sellers lose interest in continuing the sell, and buyers become active. A large number of buyers start buying, increasing demand and pushing the price upward. When the price goes up and reaches near its opening point, it closes there, and this candle becomes our red pin bar candle. Its lower wick is quite long, and from this long lower wick, we can easily understand that there is strong buying pressure in the price right now, and the price is currently under the control of buyers. So you need to observe that whenever you see such a candle forming on the chart, whether it is red or green, and its lower wick is at least twice the size of its body, you should understand that the price is showing strong buying pressure and is currently under buyers' control. In such a condition, you can plan a trade on the buying side with extra confluence. Now, let's understand the third type of candle. The third type of candle that we see on the chart looks something like this. In these, the candle's body is almost equal to the candle's upper wick. That is, in this type of candle, the candle's body is nearly equal to its upper wick. This candle can form in red or green color on the chart. If this candle forms in green color on the chart, then it indicates that the price is neutral at this time, meaning the price is neither under the control of buyers nor sellers. But if this candle forms in red color on the chart, then it indicates that the price is currently under the control of sellers. Let's see how these two candles form on the chart and what their psychology is. When this green candle forms on the chart, the price opens from a certain point. From here, buyers become active in the price, and a large number of buyers start buying. Due to this, demand increases in the price, and the price starts going upside from here. When the price goes upside and reaches a certain point, sellers become active from this point, and a lot of sellers start selling. Due to this, supply increases in the price, and the price starts coming down from here. When the price comes down from here, buyers do not let the price go much lower and bring the price to a level that is halfway from where they took it up. At this point, the price closes, and the candle forms in such a way that its upper wick is nearly equal to the candle's body, and there is no lower wick in this candle. When this candle forms on the chart, it tells us that at this time the price is neither under the control of buyers nor sellers. Because when the candle starts forming from this point, buyers push the price upward, but when sellers enter at this point, they bring the price down to halfway, which shows us equal power between buyers and sellers. Therefore, when we see this candle on the chart, it means the price is currently neutral. The price is neither in buyers' control nor in sellers. At this time, you should not enter the trade. Similarly, when this red-colored candle starts forming on the chart, the price opens from a certain point, and from this point, buyers become active. Here, a large number of buyers start buying, due to which demand increases significantly, and the price starts moving upside. When the price goes upside from here and reaches a point, sellers become active from that point and start selling heavily. Due to this, supply increases in the price, and the price starts coming down. The price, which the buyers had taken upward, comes down twice as much and closes here. And this candle forms in such a way that its upper wick is equal to the candle's body, and this candle does not have a lower wick. When this candle forms on the chart, it means that the price is currently under the control of sellers. Because when the price opens from this point, buyers take the price upward, but when sellers enter from this point, they bring the price down to twice the height buyers had taken it up. This tells us that sellers are strong at this time, and there is seller control in the price. In this condition, you can plan a sell-side trade by observing extra confluences like support or resistance. I hope, guys, that you are understanding everything well. If you are finding the video interesting and everything is clear, then please give a like to the video and make sure to subscribe to the channel. The fourth type of candle that we see on the chart looks something like this, which we also call a Marubozu candle. This candle can form in either red or green color on the chart. If we see a green Marubozu candle forming on the chart, it means that the price is currently under the control of buyers. And if we see a red Marubozu candle on the chart, it indicates that the price is currently under the control of sellers. Let's understand their psychology and how these candles are formed on the chart. When a green Marubozu, also called a bullish Marubozu candle, starts forming on the chart, the price opens from a point and a large number of buyers become active from that point. A lot of buyers start buying from there, due to which the demand increases and the price starts moving upward. At this time, there is very little interest from sellers in selling, and very few sellers actually sell. As a result, we do not see any selling pressure. As the price moves upside and reaches a certain point, it closes at that point and forms a green candle like this. This candle has no upper wick and no lower wick. It is a strong and fresh green candle that is completely under the control of buyers and entirely formed by them. That means, when this candle forms on the chart, it tells us that the price is currently in the control of buyers. At this point, you can plan a buy-side trade by observing other confluences like support or resistance. Similarly, when a red Marubozu candle starts forming on the chart, the price opens from a point, and from that point, a lot of sellers start selling. Due to this, the supply increases significantly, and the price begins to move downward. While the price is going down, very few buyers show interest in buying. That's why we do not see any buying pressure in this candle. When the price comes down and reaches a certain point, it closes there, and our red Marubozu candle is formed, which has no upper wick and no lower wick. When this candle forms on the chart, it tells us that, at this time, sellers are very strong, and the price is completely under the control of sellers. Now, let's understand the fifth type of candle. The fifth type of candle that we see on the chart looks like what we call a spinning top candle. This candle can be either red or green in color. When this candle forms on the chart, it tells us that the price is currently in a neutral state. That is, the price is neither under the control of buyers nor under the control of sellers. Let's understand its psychology and how these two types of candles form on the chart. so that you understand everything clearly and have no doubts left. When a green spinning top candle starts forming on the chart, the price opens from a certain point. From there, a lot of sellers begin selling, which increases the supply and causes the price to move downwards. As the price moves down and reaches a certain point, buyers start becoming active from there, and a large number of buyers begin buying. As a result, buying pressure starts appearing and the price begins to move upward. When the price reaches a certain point on the upside, sellers once again start selling. Due to this, selling pressure appears and the price starts moving downward again. However, this time when the price comes down, buyers are also actively buying and they don't allow the price to fall much. Eventually, the price closes around that level and our green spinning top candle gets formed. When this candle forms on the chart, it tells us that the price is currently not under the control of either buyers or sellers because the power of both buyers and sellers appears to be equal. This is evident from the fact that this candle has both an upper wick and a lower wick of almost equal length. Similarly, when a red spinning top candle begins to form on the chart, the price opens from a certain point, and from that point, many buyers become active and start buying. As a result, the price begins to move upward. When the price reaches a certain point, sellers become active from there and begin selling in large numbers. Due to this, the supply increases and the price starts moving downward. As the price continues downward, it even breaks its opening point. Then, when the price reaches another point, buyers again become active and start buying in large numbers, increasing demand and pushing the price back upward. When the price starts rising again and moves slightly up, sellers are also selling at this level. As a result, the price cannot rise much and finally closes there. This forms our red spinning top candle. This candle has upper and lower wicks of approximately equal length, and its body is very small and positioned in the center. When this candle forms on the chart, it tells us that the price is currently neither under the control of buyers nor of sellers. Now, let's understand the sixth type of candle. The sixth type of candle appears like this. The upper and lower wicks of this candle are very short. This candle can form in either red or green color on the chart. When this green candle forms on the chart, it means that buyers are currently strong, but not extremely strong. And when we see this red candle on the chart, it means that sellers are currently strong, but again, not very strong. Let's understand how these two candles form on the chart and what their psychology is. When this green candle begins to form on the chart, the price opens from a certain point. As it opens, sellers become active and begin to sell heavily, which increases the supply and causes the price to move downward. As the price moves down and reaches a certain level, buyers become active from that point and start buying in large numbers. Due to this, demand increases and the price starts moving upward. When the price moves up and reaches a certain level, sellers once again become active and try to push the price back down. However, this time, buyers do not allow the price to fall much because they are still active and not yet weak. As a result, the price closes around that level and our green candle gets formed. When this type of candle forms on the chart, it indicates that buyers are strong, but not extremely strong. So whenever you see this kind of candle forming on the chart, you should understand that buyers are currently in control, but not overwhelmingly, because seller strength is also visible in this candle. In the same way, when this red candle begins to form on the chart, the price opens from a point. From that point, buyers become active and start buying in large numbers, which increases demand and pushes the price upward. As the price moves upward and reaches a level, sellers become active from there and start selling heavily. As a result, supply increases and the price starts moving downward. When the price reaches a certain level on the downside, buyers once again become active and try to push the price back up. But this time, sellers don't allow the price to rise much because sellers are still actively selling. As a result, the price moves slightly upward and then closes around that point, forming our red candle. When we see this kind of candle on the chart, it means that sellers are currently strong, but not very strong. In such a condition, you should avoid planning a trade because this candle also reflects some strength from the buyers. So these were our 6 types of candles and their psychology that we commonly see on the chart. I hope you liked this video and that you clearly understood how each candle forms on the chart and what their psychology is. Guys, do let me know in the comments how you liked the video. And if you found the video helpful and learned something from it, please give it a like and don't forget to subscribe to the channel. Today's question for you based on this video is, take a look at this candle and try to understand its psychology. Then comment and tell me, are buyers strong at this moment or are sellers in control? If you have watched the video carefully and understood it well, I'm sure you'll be able to answer this question. So don't forget to comment your answer. Are buyers active or sellers? See you in the next video. So goodbye and take care.